Oil prices dropped for a second day ahead of tomorrow's OPEC meeting. West Texas Intermediate fell nearly 3% to $58 a barrel. And despite concerns of a global supply glut, many investors expect OPEC to maintain current production levels. Jackie DeAngelis has more.
The oil market awaiting tomorrow's OPEC meeting to see if it will cut production to stem the glut of oil flooding the market. According to an exclusive CNBC survey of prominent oil analysts, strategists, and traders, the majority believe there will be no production cut at this time. But nearly half think that supply and demand dynamics are the key factor driving oil prices right now.
We still have a lot of production in this country. We still don't have a lot of use for it yet. Although global demand looks like it's picking up a little bit, I think we come off a little bit after the OPEC meeting.
Meantime, the supply glut grows. Saudi Arabia is at peak production. OPEC as a whole is producing over its 30 million barrel per day quota. And here in the United States, another production bump last week moves the needle closer to 9.6 million barrels per day. OPEC's goal in enduring low prices has been to squeeze out U.S. shale producers, but it hasn't been working, and as we know, production is rising. The survey respondents had no consensus on what they think about U.S. production. A third said they think it will rise, a third said it might flatline, and a third said they think it will fall.
I think we are going to start seeing lower levels in crude oil. I also am looking at another thing that's coming into the market, and that's Iran. So we're going to have another supplier into the market, along with OPEC producing, along with the U.S. producing.
To cut or not to cut? That's the question for OPEC. Even if the cartel doesn't act now, about a quarter of those surveyed believe they will have to act next year, and thus the game of chicken continues. For Nightly Business Report, I'm Jackie DeAngelis.